Welcome, everyone. Today, I'll be covering a review of my 2025 portfolio, and I'll be going over some stocks and sectors, as well as going over the outlook of the markets and how I see the markets performing over the next couple of months. And I think with India growing with extremely strong growth and momentum, it's looking good. So I'm excited to walk you through my portfolio and the drivers behind it. So I'll just present my screen. So my portfolio has actually consistently outperformed all the major market benchmarks, which were the indices that I set. So the disclaimer would be that I'm not giving any financial advice, and this video is for informational purposes only. So please just read the disclaimer. So if we look at absolute returns, my portfolio has performed 20.88% returns compared to Nifty 50 is 12.53, and then Sensex and Nifty 500 given even lower. So if you look at the outperformance, the absolute outperformance is ranging between 8 to 9.72%, as you can see on the chart. But if you look at the risk-adjusted returns, the alpha is 3.6%. So what that means is that if you go above and beyond what the market expects at this level of risk, the portfolio has performed 3.6% higher than that, which proves that it's not just taking higher risk, but also some level of skill involved in generating alpha. And the Sharpe ratio is 0.61%, which tells you that Sharpe ratio basically says what the return is per unit of risk that you're taking. And while 0.61% is not great, I think the portfolios outperformed the benchmarks, so it's all right. And the annualized returns are 19.1%. But if you look at the starting of the year, in February, in fact, the portfolio fell almost 15% because of foreign investors reducing their stake, a lot of profit booking. There was overstretched valuations and monetary tightening and inflation. So the RBI was basically hiking rates, and the basically there was a lot of profit taking, that which is why the market was going down. So I don't expect a lot of that to happen soon, which is why I think it will perform better than what the annualized return is projected right now, because my target was 30% for this year. So if we go over to the month-on-month tracking, we can see initially when the market went down, because my beta is 1.13, it's higher than the market, so the portfolio went down more than the market. So the initial months were not as good. However, now it's performing better than the market. So if you look at the comparison of the valuations, we can clearly see that my portfolio is PE is 37.3, which is significantly higher than the index. You can compare to any one of them. But this is because I've taken a lot of mid and small cap companies, which are high growth companies, which is why the 37.43% 43 XPE is there. And so I would say it's also higher earnings per share. So I would say it's okay. Like it's not like the valuations are very overstretched. So I'm not too worried about that. If you look at the portfolio characteristics, we can see that I'm very bullish on energy and very heavy on IT too, as well as financials, which I think are rebounding now. So my portfolio is concentrated in these sectors. And if we look at, I use Bloomberg Terminal for this. So if you look at the active risk decomposition, we can see that the total active risk is 23.06%. So what this means is that the risk that is not based on just the market, it's not systematic risk. So it's based on basically the portfolio allocation that doesn't match up with the market. And then we have systematic risk of 74.78%, which is basically 74% of the portfolio will move as per how the market moves. And the idiosyncratic risk, which is basically dependent on individual news about the stock, like earnings or a scandal or any surprises that happen, are just dependent on individual stocks in the portfolio. So here, the total active risk is pretty high at 23.06%, which I think is good. And then the top contributors to this risk are HBL Engineering, Angel One, Adani Ports, and Aadhar Housing Finance. So if we talk more about the risk, the value at risk is 37.93%, which basically just shows that my portfolio is highly concentrated in these sectors and I have to have high conviction in this. So I do. And yeah, the top risk drivers again are the same: Angel One, HBL Engineering, and Adani Ports. And as I mentioned, the beta is 1.13. So obviously, if you want a high return, then you have to take high risk. And if you look at the individual performance of the companies, we can see that HBL Engineering actually performed the best with 82.07% returns. Um, and this is because they surprised in the profit, which grew by uh, a lot, I think 135%. So yeah, there was a huge rally in the stock. Then gold again, it's been huge. Even though it was just 5% of my portfolio, it went up by 51% because a lot of central banks were buying gold, and there was a lot of uncertainty in the market. So since gold is considered a safe haven, people were just buying a lot of gold. And then Adani Ports, I got at a really good price, and they had stable execution, so it's gone up. It went up to 30%. Now it's down a bit, but uh, it's met the target. As well as my favorite stock, Aadhar Housing Finance, which also went up to 30% and is down 4% now. But yeah, these are the top performers. The bottom performers, because of cyclical reasons, are KPIT, Pi Industries, Coal India, and Adani Green. I think KPIT will rebound also. It was mainly issues with the customers in the US, US India relations, as well as the whole IT sector being affected. Pi Industries also did not have very good results. Um, but again, I did a whole stock analysis for um, KPIT, Pi Industries, and Coal India, so you can go check that out on why I think they will still do well. Adani Green Energy, I'm still analyzing, like I'm still creating the the document for it, so I'll publish that soon. And stable performers were Angel One and Vodafone Idea, but if I'm being honest, they weren't stable at all. Angel One swing from negative 30% to positive 30%. Right now, it's at positive 7-8%, and Vodafone Idea has been down the whole time. Now it's up 8%. But yeah, I think Angel One, because of regulations with the government creating regulations around FNO, which is where they generate most of their revenue. But I'm not too worried about that because I believe in the management and the direction of the company now that they're pivoting into wealth management. And Vodafone Idea is another stock that I have to put out the video analysis for. Angel One I already have out, so you can check that out if you want. So if you look at the future, I think it's looking good. The Indian economy is forecasted to have extremely strong growth, 6.7 to 6.9%. And the government is doing some good reforms, some good policies, and the market is, I think, finally more stable. This year has been really, really choppy, and the portfolio is doing well. So I think we're on track for the 30% target that I had set in the starting of this year. And let's see how it performs till January 21st, and let's see if my portfolio will reach the target of 30% I set. So yeah, thank you.